Good morning and welcome to the 2022 Abacus Property Group Annual General Meeting. My name is Myra Salkender and I am the chair of the group. On behalf of the board, I'd like to acknowledge the Gadigal people of the Eora Nation, the traditional custodians of this land, and pay our respects to their elders, both past, present, and emerging. While our 2021 AGM was conducted virtually, it is my great pleasure to be able to address you in person today in Abacus Group's new head office at 77 Castlereagh Street, Sydney. I would like to thank you, our security holders, for joining today's proceedings in person. I would like to point out that this meeting is being recorded. Let me also introduce my fellow Abacus directors here at the meeting. Stephen Sewell, our Managing Director. Mark Haberlin, Mark Bloom, Holly Kramer, Jingmin Jian, and Trent Alston. We are also joined in the audience today by members of the Abacus management team and the group's auditor, Anthony Yuan from Ernst & Young. As advised in the notice of AGM meetings, Holly Kramer will be retiring from the board at the conclusion of this AGM. Holly has served on our board for the last 4 years, and I, along with my fellow directors, would like to sincerely thank Holly for her valuable contribution and leadership during her time on the board. After this year's AGM, the 6-member Abacus board will be 33% female, and we anticipate that additional board appointments will be considered in the next 12 months to ensure the group is adequately represented across its material skills matrix. As it is past the appointed time of 10 a.m., I declare the meeting open. This meeting comprises the annual general meetings of the members of Abacus Group Holdings Limited, Abacus Group Projects Limited, and Abacus Storage Operations Limited, in conjunction with the meetings of the members of Abacus Trust, Abacus Income Trust, and Abacus Storage Property Trust. The AGM completes a transformative period for the Abacus Group. With the support of our highly skilled and engaged team, we have continued to deliver on our strategic objectives with our vision and values at the center of everything we do. With pro forma total assets reaching $5.5 billion, split evenly across our commercial and self-storage portfolio, we are well placed for growth in the year ahead. Our focus remains on creating exceptional value for our customers and stakeholders. During FY22, and including some post-balance sheet date transactions, we deployed over $1.2 billion of capital into our strategic commercial and self-storage asset classes. We believe this deployment through a series of acquisitions and joint ventures, which were funded with a combination of debt, proceeds from divesting non-core assets, and the $200 million equity raising undertaken in March 2022. In the commercial portfolio, we completed the acquisition of 77 Castlereagh Street, Sydney, the home to our new corporate office location, and the remaining 50% interest in 324 Queen Street, Brisbane. In addition, we settled on our 33.3% interest in Meyer Burke Street in Melbourne. These investments have enhanced our portfolio quality and are expected to underpin long-term sustainable income for security holders. We have also had an active year in the growth and development of our self-storage portfolio. We acquired 31 storage facilities, including a mix of existing stores and development sites, for $526 million, while concurrently focusing on the integration of Storage King, our self-storage platform, into the group. We remain confident our multi-pronged self-storage growth strategy, inclusive of a $435 million medium-term development pipeline across high-quality locations positions the platform for continued growth in FY23. These transactions position us to deliver on our strategy of concentrating on our target real estate sectors of self-storage and commercial. We believe this will deliver long-term sustainable outcomes through our active management and focused approach. I am confident we have the resources in place to deliver on our investment, asset, customer and brand management objectives that will allow the group to achieve its vision to create exceptional value for our customers and stakeholders. Turning now to our FY22 financial results, we achieved a statutory profit of $517,200,000, an increase of 40% on FY21. This solid performance was largely driven by the deployment of capital into accretive acquisitions and strong value uplift in the storage portfolio. The group's funds from operations for FY22 was $160.9 million, an 18% increase on FY21 and equating to 19 cents of FFO per security. The distribution payout ratio was 95% of FFO and equated to a full year distribution of 18 cents, an increase of 2.9% on FY21. Net tangible assets per staple security was $3.85, an increase of 12.2% on FY21, driven by the strong portfolio revaluation process that resulted in a net increase in investment property values for FY22 of $345.5 million and a weighted average cap rate of 5.39% across both the commercial and self-storage portfolios. The board periodically reviews levels of liquidity and gearing to ensure it is appropriately capitalized to support the group's strategy. As at 30 June 2022, gearing was at 28.7% and sitting within our target range of up to 35%. Stephen will provide an update on the operational performance of the business shortly. The group made good progress on its sustainability journey during FY22, with our dedicated team focused on the long-term sustainability targets set by the board. We recently issued our FY22 sustainability report, and I encourage you to read the report, which sets out our commitment to sustainability and the approach we are taking along with our progress to date. In FY23, we will focus on reviewing our sustainability strategy with a view to setting a revised net zero target, enhanced governance and management systems, and reporting to meet sustainability audit standards. This measured approach ensures we continue to take appropriate and meaningful steps towards reaching our sustainability targets. Also of particular importance is our commitment to our people. We remain focused on providing a safe, healthy, and constructive work environment supported by the ongoing implementation of our work, health, and safety strategic plan. In addition, a number of employee initiatives were carried out during the year aimed at enhanced team engagement and business relationships. During the year, we conducted our annual employee engagement survey, which pleasingly received a high response rate with improvement reported across all categories from the 2021 survey response. Now moving on to our sustainability highlights for the year, I'm pleased to say that we saw a 20% decrease in our Scope 1 and 2 greenhouse gas emissions and a 23% reduction in water intensity. Following the implementation of multi-year initiatives such as our solar PV installation, which is now installed at 52 assets across our portfolio, the group remains on track to meet our neighbours' energy and water rating targets by FY25, with ratings increasing to 4.7 and 4.5 stars respectively for the year FY22. Whilst these results are very encouraging, we are cognizant of the impact COVID-19 had on reduced physical occupation of our buildings and are working towards maintaining these improved ratings in the coming year as we return to increased building occupancy. Implementation of our Modern Slavery Action Plan is ongoing in collaboration with the Property Council Modern Slavery Working Group. Work in this area has included the strengthening of supplier due diligence and understanding of supply chains and operations. Over the last year, we have also embedded a governance, risk, and compliance system to complement our risk management framework. Both the board and executive committee take the governance of risk very seriously, and we're actively involved in the development of this system and its alignment to the overall group strategy. Before I hand over to Stephen, I would like to thank the board and management team for their dedication to the successful growth of the business and to our security holders for their ongoing support.
Thank you, Myra, and welcome everybody. So as Myra mentioned, this is actually the maiden voyage for this office. In fact, the staff and the team are not resident in this office as yet. We'll be progressively moving in over the next couple of weeks, but this has been the culmination of about 7 or 8 weeks of frantic activity to fit out this entire floor in the building that we now own. I'd also like to add my welcome and acknowledge the Gadigal people of the Eora Nation and traditional owners of the land on which we gather, and pay my respects to the elders past, present and emerging. Executing on our strategy, the accumulation of the last 4 years of a large number of transactions sees us evolve, and the balancing of the portfolio now somewhat complete, with 5.5 billion of assets, as Myra mentioned, and the portfolio currently equally allocated, although that's not the target by any stretch, between the two key sectors of commercial and self-storage. Abacus now sits as a strong asset-backed group, annuity-style business model positioned to deliver, we believe, long-term income growth and maximise security holder value. We have been a group that has been very active during the year with various capital management initiatives, including resetting the debt maturity profile, increasing our interest rate hedging, and also we felt it was prudent, given the inflationary pressures, to lock in that hedging for FY 23, 24 and 25. And in addition, undertake the placement that we did, fully underwritten $200 million placement back in March to replenish the investment capacity of the group for continued deployment, predominantly into self-storage, acquisitions of trading stores, and also some of the longer term development pipelines that we're working on. During the group also, quite momentously, we exited the last remaining residential development and mortgage loan position, which brings to an end the non-core business activity of the past. And the two most notable properties being the surplus land at Riverlands in Milperra, as well as the 7 hectares of land at Camellia out near Parramatta, will now be managed internally in the commercial group, with a focus on realising the long-term development potential of those two infill Sydney suburban land parcels. The operating performance, as we announced back in August, was very solid. It demonstrated the benefits of the diversification of the portfolio, both within the commercial sector as well as the two businesses across commercial and self-storage, with trading condition, particularly in self-storage, showing continued very positive momentum. And whilst we believe the COVID disruptions did impact our commercial portfolio, it was really just at the margin. It was pleasing to see leasing momentum return in the second half of FY22. Self-storage has been a core asset class for Abacus since way back in 2005. And in the time since then, we've been able to accumulate now over $2.5 billion of exposure in this asset class through a variety of investments that we do have, trading assets, development sites, as well as some other investments. Intentionally, we construct the portfolio of our storage locations to be predominantly located in significant urban areas. In fact, 64% of our stores are located in the top 3 suburban areas, particularly Sydney, Brisbane and Melbourne, as well as very strong concentration in Auckland and New Zealand, and a handful of quite well trading stores in Western Australia. We believe that will hold us in good stead, and our mapping and strategic locations of stores is expected to enhance the portfolio in years to come as the development pipeline. In particular, for FY21, we accumulated and acquired the balance of the Storage King operating platform, and enhancing that business, growing that business, has been one of the key focus for the group in FY22 and ongoing. Having an expert and very capable management business, we believe, is critical to growing our investment in the properties of self-storage and does distinguish us from some other owners in this space. We believe that will continue to drive returns in FY23 and beyond. We've taken various steps in the Storage King business that have delivered operational improvements, some technological advancement, particularly in performance management, financial management, and also increased our customer value proposition at Storage King's branded stores, both owned by ourselves as well as our licensee partners, third-party owners, which are considered to be vital to enhancing the platform's scalable and sustainable offering into the future. And owing to that strong operational performance, including internalising the Storage King platform, we did see in the last couple of years the pace of our acquisitions and investments deliver a very large 56% growth in net property income attributable to self-storage. $109.6 million of EBIT, which was a 57.5% increase in FY21. And despite the overall COVID pandemic, conditions for the last 2 years have continued to be the best they have ever been, with an established portfolio at June occupancy sitting at about 93%, average rent of about $323 up from $301, and trading conditions strengthened right across the board. After the strong FY22 year, we do remain positive in our outlook for self-storage, although we're cautiously optimistic as we can see obviously the macro factors of inflationary impacts having on the general consumer, the Australian consumer. In bearing that in mind, we do remain focused on the multi-pronged growth strategy that we have: selective acquisition of stores, development of brand new product stores in great locations, and an expansion and optimisation of the stores, some of which we've owned for a very long time. Turning to our commercial portfolio, we've seen a transformation of our investments. There's only a very few number of commercial properties that we've owned for more than 5 years. Our portfolio total value now sits at about $2.5 billion, $2.6 billion. And following the acquisition of this building, which is the 11 levels of office that sits above Westfield Sydney, the remaining investment we made in our 324 Queen Street building in Brisbane, as well as some divestments where we've got rid of 8 non-core assets for nearly $170 million. We now sit, we believe, with a good portfolio of 18 assets diversified across not only different markets, different grades of assets at different life cycles. Almost $500 million is invested in retail or mixed-use investments, 2 non-discretionary grocery-anchored shopping centres in partnership with a superannuation fund, 2 further sites, both the Myer store as well as our Oasis shopping centre on the Gold Coast. As I said, despite the challenging COVID conditions, for FY22, we did a lot of leasing transactions with positive leasing spreads, and we were able to, with the increased asset base, deliver 14% growth in net property income for commercial to $95.6 million, 10% up on FY21. Even in spite of the challenging operating environment and the headwinds associated, we were very pleased with the portfolio performance during FY22, and I'll touch on the first quarter update in a moment. In retail as well, we also considered some challenging conditions, with like-for-like income declining marginally, but pleasing, the weighted average lease expiry of our properties increased significantly with some major leasing transactions undertaken and the acquisition of the Myer store down in Melbourne. Turning to the first quarter, for the first quarter to 30 September 2022, we've again experienced solid activity levels and growth across both self-storage as well as some mixed operating conditions across the commercial portfolio. Trading conditions remain positive overall in self-storage, following on from the last 24 months of extraordinary strong results. The dynamics in self-storage of rate applicable for space and occupancy levels at each store have played out very differently across our portfolio. And as we've tracked them in the last 24 months, most of the increases and decreases were actually associated with the various levels of lockdown of the Australian consumer in those various states. Pleasingly, the revenue for available space has grown in the first quarter to 7.6% when compared to the average across FY22, even though we have seen a slight reduction in occupancy, as you can see there, to 92.2% across the first quarter, down from 92.7% across FY22. Even in spite of that, the average rent charge per square metre has still grown quite materially to $336 and $310, up from $310 and $288 respectively over the same period in FY22. Again, totally expected, and what we believe is normalising to pretty standard operating conditions by historical standards. Importantly, our self-storage development pipeline is progressing well, with 2 brand new developments recently opened in Epping down in Melbourne and Preston's here in Sydney, offering 13,000 square metres of space in a new format contemporary stores, with 4 new format contemporary stores under construction today. During the quarter also, on the commercial side, over 7,000 square metres of office space was done with across 20 transactions, with a further 1,500 square metres of retail leasing also completed. The prevailing economic conditions continue to weigh on our key office markets, Sydney, Brisbane and Melbourne, with our first quarter occupancy down 1.7% to 93% and our weighted average lease expiry very marginally down to 3.7 years. Our face rents are holding, but we see that incentives in most markets remain at historical high levels, and we don't see a trend at the moment. We do see a trend at the moment where tenants are renewing for shorter periods given the uncertainty of the economic outlook. Customer engagement remains a key focus for us in our office portfolio and retail, and in response to our customers and the changing nature of work, our flexible office solution has been a key focus and somewhat of a success at Abacus. We've provided 2 facilities, one in our property down the road here at 14 Martin Place, as well as in our building that we own in North Sydney, 99 Walker Street, and we've achieved occupancy levels of almost 90% at both of the 2 Flex by Abacus offerings. We do see and will continue to explore other expansion opportunities across our portfolio. With a more positive outlook now in our retail portfolio, where leasing activity has improved across our centres, the first quarter occupancy reduced only marginally and our WALE just down slightly. And of note, we're very pleased at the improved operating conditions at Oasis up on the Gold Coast, where the team has experienced and driven very strong leasing activity across both new tenant and renewal transactions. Importantly, in this market, the group's balance sheet remains in a very solid position with heightened levels of liquidity and a quarter-ended gearing at about 31.6%, with minimal debt expiring in the medium term. So allied with a new office and a new look and feel, to ensure the business can continue to deliver on our growth targets and ambitions, we felt it was appropriate timing to refresh our branding. First phase of our business evolution set back in 2018 was to transition the balance sheet allocations to the two key sectors of commercial and self-storage, with the focus now on the next phase being our people, processes and systems, and delivering better returns from our portfolio of assets. So very much an asset management type focus. We're viewing this second phase as a new era, which is a convenient acronym for our values, being entrepreneurial, responsible and accountable. And we're confident and exciting that our new branding, which you're about to see for the first time, will reinforce our vision, strategy and values, rejuvenate the team and our culture, and refresh our perspective for what lies ahead. So as you can see, it's a sophisticated, quite subtle evolution, a fresh, more contemporary look, and if you look around the office, you can see the colours used, with a key objective of the rebranding to position Abacus to best deliver on our vision to create exceptional value for our customers and stakeholders as an owner and manager of real estate and an operator of storage locations. In response to various factors, including team development, business analysis and our changing customer requirements, we've sharpened our messaging and visuals to emphasise our responsiveness and adaptability, and as a reminder that our people and customers are constantly growing and changing. The new colour concept is a strong statement. The green is traditional and associated with wealth creation and the notion of being established, while also giving a nod to sustainability, renewal and a sense of ambition. The grey and rose accents are understated and modern and resonate with our customers and team members. We feel this solution highlights our unique position in the market and reflects who we are, what we want to become and how we're going to achieve those goals. Early in the new year, we'll also be changing our ASX code to ABG and referring to our business as Abacus Group compared to Abacus Property Group, reflecting the ongoing integration of our storage operating platform, Storage King. We're also expecting our new website to go live in the first quarter of 2023, incorporating both corporate and active leasing requirements into an improved user experience. Getting to this point has required much dedication and focus from the whole Abacus team, and without their dedication, we couldn't have achieved what we have done this year in a very short space of time. So in conclusion, despite being cautious on the outlook, given the various inflationary and economic pressures, we remain very confident that the group is positioned to leverage our key enablers, being our people and culture, our market insight, and our repositioning capability to deliver recurring income and value creation over the medium to longer term. I'd like to reiterate our previously provided distribution guidance to provide at least 18.4 cents per security for the financial year 23, which will reflect a payout ratio in the range of 85 to 95% of our funds from operations. This guidance is predicated on there being no major impacts and our operating conditions do normalise. Our 22 results have progressed our vision to create exceptional value for our customers and stakeholders. The size, nature and market positioning of our two investments will permit the group to deliver recurring income and value creation, we believe, over the longer term. Acknowledging the uncertainty caused by the prevailing economic climate, we are positive on our differentiated AREIT positioning in the two sectors and expect active asset management together with a responsive customer and brand management will help deliver those long-term sustainable outcomes. I'd also like to thank the entire team and my fellow directors, also to add my thanks especially for Holly for her efforts since joining the board back almost 4 years ago, and thank everybody, including our shareholders, for your continued and valued investment in the group. I'll now hand back to Mara.
Thank you, Stephen. This now brings us to the formal part of the meeting. The last annual general meeting of Abacus Property Group was held on 17 November 2021. The minutes of that meeting were approved by the board and signed by the chair of that meeting in accordance with the provisions of Section 251A of the Corporations Act. The original minutes are available for inspection at the registered office of the company should any member wish to view them. The notice of AGM meetings was mailed to all registered members on or about 21 October, and it is to be taken as read. Voting on all resolutions will be conducted by poll. For the purposes of the poll, I appoint Andy Marr of Boardroom, the company share registry, who have examined and prepared summaries of the proxy forms received, to act as returning officer and to conduct the poll. The persons entitled to vote on this poll are all security holders, representatives and attorneys of security holders, and proxy holders who hold blue voting cards. If you are attending in more than one of these capacities, you will have been issued with as many voting cards as you have separate capacities. If anyone believes they are entitled to vote on this poll in any capacity and does not have a blue voting card in respect thereof, please raise your hand now, and a member of our share registry team will assist you. At the appropriate time, I will ask that you mark your vote for the resolution on the blue voting card. If you are a security holder and wish to cast all of your votes for a resolution, please place a mark in either the for, against, or abstain box next to that resolution. If you are a proxy holder, a summary of the votes to which you are entitled has been attached to the voting card. If the summary of votes includes discretionary votes, these are yours to cast at your discretion. If you wish to cast the discretionary votes, please place a mark in the corresponding for, against, or abstain boxes. If your summary of votes does not have any discretionary votes, you do not need to mark your voting card and will simply need to hand it to the returning officer at the end of the resolutions. After all resolutions have been read and voted upon, please place it in one of the ballot boxes that will be circulating the room. Are there any questions in relation to the poll process? Proxies have been inspected and all those validly lodged have been accepted. Proxies have been received representing approximately 770 million securities, or 87% of the issued capital of the company. Undirected proxies or open votes that have nominated the chair of the meeting as their proxy will be cast in favour of each resolution in the notice of AGM meetings. We will now proceed to the resolutions set out in the notice of AGM meetings. The first item of notified business is to consider the 2022 annual financial report and other reports. There will be no vote on this item and is a discussion item only. We have our auditors present to answer any questions relating to the conduct of the audit and the preparation and content of the independent auditor's report. Are there any questions or comments on the 2022 annual financial report? Are there any questions or comments on the management of the company? Are there any questions relevant to the conduct of the audit and the preparation and content of the auditor's report to be put to the auditor? We will now proceed to the resolution set out in the notice of AGM meetings. Resolution 2, adoption of the REM report. Resolution 2 is to adopt the REM report, which is set out on pages 15 to 36 of our 2022 annual financial report. The remuneration report explains the board's policy in relation to the nature and amount of remuneration paid to directors and executives and the link between remuneration and performance conditions. The proxies received in respect of this resolution are now being displayed on screen. Are there any questions on this item? I now put the motion that the remuneration report be approved. Please mark your voting instruction for this resolution on your blue voting card. The next item of notified business concerns the re-election of directors to the boards of Abacus Group Holdings Limited, Abacus Group Projects Limited, and Abacus Storage Operations Limited. The first part of Resolution 3 relates to the re-election of Trent Alston as a director of the companies. Trent retires by rotation in accordance with the constitutions of the companies, and being eligible, offers himself for re-election. Trent is a non-executive director, and as you see, Trent's bio on the screen now. The directors value the contribution of Trent and intend to vote in favour of the resolution. The proxies received in respect of this resolution are now being displayed on screen. Are there any questions on this item? I now put the motion that Trent Alston be re-elected as a director. Please mark your voting instruction for this resolution on your blue voting card. The second part of the Resolution 3 is to re-elect Jingmin Xian as a director of the companies. Jingmin retires by rotation in accordance with the constitutions of the companies. Being eligible, offers herself for re-election. Jingmin is a non-executive director, and you can see Jingmin's bio on the screen now. The directors value the contribution of Jingmin and intend to vote in favour of the resolution. Proxies received in respect of this resolution are now being displayed on screen. Are there any questions on this item? I now put the motion that Jingmin Xian be re-elected as a director. Please mark your voting instruction for this resolution on your blue voting card. Resolution 4 seeks security holder approval for the granting of rights to the Managing Director of Abacus Property Group, Stephen Sewell, as his FY23 long-term incentive and under the Abacus Property Group long-term incentive plan. Details of the plan were provided in the explanatory memorandum that accompanied the notice of meetings. Proxies received in respect of this resolution are now being displayed on screen. Are there any questions on this item? I now put the motion that 456,204 rights under the incentive plan be granted to the Managing Director, Stephen Sewell, on the terms set out in the explanatory memorandum. Please mark your voting instruction for this resolution on your blue voting card. Resolution 5 seeks security holder approval to refresh the 15% placement capacity imposed by ASX Listing Rule 7.1. The details on the resolution is contained in the explanatory memorandum that accompanied the notice of meetings. Proxies received in respect of this resolution are now being displayed on the screen. Are there any questions on this item? I now put the motion that the 15% placement capacity be refreshed as outlined in the explanatory memorandum. Please mark your voting instruction for this resolution, your blue voting card. Resolution 6 seeks security holder approval that the aggregate maximum annual fees able to be paid to all of the non-executive directors be increased as outlined in the explanatory memorandum that accompanied the notice of meetings. The proxies received in respect of this resolution are now being displayed on the screen. Are there any questions on this item? I now put the motion that the aggregate maximum annual fees able to be paid to all of the non-executive directors be increased, as outlined in the explanatory memorandum. Please mark your voting instruction for this resolution on your blue voting card. That concludes the resolutions to be voted on today. As noted, we are conducting a poll on all resolutions, and I note that the poll is now open. I now invite the staff of Boardroom to collect the voting cards. Have all persons that intend to vote submitted their cards? I therefore declare the poll closed. This concludes the notified business of the meeting. I will now open the meeting for a period of general questions. Are there any general questions or comments? Is there any other business which may be lawfully brought forward to this meeting? There being no further business, I'd like to thank all security holders for their attendance, and I now declare the Abacus Property Group Annual General Meeting closed. The results of the poll will be announced to the ASX once they are available.